Hey everyone, this is DayTraderRockStar for DayTradingRadio.com for a S&P market update for the week of April 22nd. I was finishing up my watch list on Friday, and I never really had enough time to put out my thoughts on the overall market conditions, which I usually do post along with that watch list. So I wanted to get back to the office tonight, Sunday night. Futures before I was watching. Let me just double check that. Yep, the futures are continue to push higher. They're up right now 8 points, and this is something I was looking for at the end of last week, and I'm going to show you exactly why. But even better, we're going to be talking about the upcoming sell in May trade and what my thoughts on it, and overall the market conditions for this week. Now, we left off last week coming out of the terrorist event in Boston, the bombing, which really shook the markets, I believe. But it was also some economic indicators that weren't up to par. So there was some weakness going into that event later in the afternoon. It's hard to really, figure out how much of the effect of the drop was because of the overall market weakness was in that direction and added on to the bombing, definitely. But the next day we had a big rally, and then we had a big reversal, then we had a little bounce, then we had a follow through, and we had a pretty decent day on Friday. And now that the events are behind us, those events make things so jittery, because this market again continues to be what I call the most hated bull market, meaning that everyone's looking for an excuse to sell, or trying to predict it and stuff, and waiting for it and calling for it and everything else. And I definitely understand why, and we're going to go over that reason right now. Here's a daily chart. Each candlestick represents a daily, the daily action of the market, the S&P 500, and you can easily see the recognizable channel that's developed, and these continuation flags that have really just been a sign of a healthy market. When we talk about patterns, we talk about technical analysis, we talk about some of the more standard and easy to recognize things or flags. An uptrending market kind of pulls back a little, and when you start to pull back, you have some other indicators underneath. I have the 20 and 50 period moving average and the 200. And in a very bullish market, you tend to see that 50 period moving average hold. The 20 is a little, it's going to be a little choppier. It's a little faster. It's closer to the price. But the 50 is always a good level to watch. And the 50 comes into play a lot, and you can actually see basically we've held on to that 50 period moving average. And on this last pullback, we've got back into that same situation. Our momentum has drifted back into an oversold level, which recently, the 3 times that it lined up in the flag, it was just a perfect change of momentum, and that's how you get the stochastics to come down into oversold, to push up and overbought. Your momentum, your selling momentum dries up, buying momentum starts, and that's where we, if we get a crossover early this week and we start to break out of this flag, which I do believe is going to happen, the next thing we want to watch is, because we're so close to that May 1st trade, are we going to fail here? This recent high here, if we take a look here, this recent high was a new high, and so that becomes a major level. So I could say that we're going to probably feel pretty good about getting a bounce early this week, either be Monday, Tuesday, probably Monday, the way the market's looking right now. Again, some of the events are behind us. There's nothing really here to cloud this, except that everyone expecting the sell in May and go away. We're going to talk about that in a second. So you see this beautiful a beautiful flag. Typically this breaks higher, momentum shifts, and we move higher. Let's take a look at the weekly chart. The weekly chart here, I broke this down for you, and you can actually see, let me bring this down there. This is a weekly chart, and all the way back, this should be 2010 back here, not 2000, or actually, let me see what we have here. I know I messed up before, and I actually did this video before, and then I actually lost it. It didn't save properly, so I had to go. This is my second time doing it. So let me fix this right now. This is 2010. Basically what I'm showing you here is the recent weekly long range chart on the markets. And come on. There we go. And each of the pullbacks starting May for the last 3 years have been pretty much started to the week, to the day, the first week in May. We kind of made those highs, and we got an extended pullback. Remember, each one of these candles represents a 5-day trading. So it takes a while in between that chop. This is basically, a whole month right here of sideways action. So you might have a situation in May where you're not going to maybe see that direct pullback. It's like it's not going to. This is weekly charts, and that weekly pullback might not be seen because we're going to be so tied up to the smaller time frames. Looking at the dailies, looking at the 60-minute charts. So it's great to look at this because I think everyone is looking at the sell in May trade going forward, and with everyone looking at it, that brings in the possibility of the market actually doing something different. It's just that's the key thing that I've learned over the years of trading, that you just can't predict this from previous time, and if too many people believe in something, the market is sure to go the opposite way, or push it down a little further and push a little higher. It tends to go higher than most people expect, and tends to go lower than most people expect. So a lot of people are expecting this sell in May trade, and it's a logical one. If we break it down to the monthly chart, you can see the monthly chart has pushed back up, and the best thing you can see here is basically the three tops here, going back to 1999. And we just recently broke above that top. We did officially break all-time highs, and that's impressive. That's a breakout. You might look at here, and you're starting to see the stochastics kind of embedded up here, pushed up here. So we're not really. That's usually a sign of strength. You can see the last time we really got embedded here, we had a multi-year rally. A multi-year rally. Of course, these two pullbacks were defined, issues in the market. This was the tech bubble, and then 2001, 9/11, and then here we had the banking collapse, and that all happened in these big pullbacks. So what if these events weren't here? How far would this market be without that? Because we're right back up to where we have it now. Are we going to get another event that takes us back down? Or is there going to be just a pullback before we continue to move higher? Or are we going to break higher? Now, it's just fun. It's fun being part of the markets and making your predictions. A lot of people think we're going to be pulling back. I think we have a good shot of actually pushing a little bit higher just based off of that. Day by day, we're going to continue to stay with great stocks. This week's HPS watch list went out. It has great setups on it. I'm going to talk about two of them right now, because I'm starting to bring back the kick-ass trade of the week, and the kick-ass trade of the week right now has to be PRE. This is a stock we got into last week and traded it, and it still has that really recognizable channel. But we had this big down day. It was the marathon bombing day, and it, again, I took that day. It actually took me out of some of my positions. You don't know. This is an event that catches you off guard. You're not sure if the market's going to react. It's time for it to pull back. Everyone's saying maybe this is a trigger. So, you take positions off. You start losing confidence. The next thing you know, the market bounces right back. And in this case, you push right back above this, this large range day. And whenever you have a large range day, it's usually a marker on the chart. And that marker becomes an important level, because a break back above that, large range day is usually a very bullish signal, and that's exactly why. And we started breaking out of this flag. So everything pointed to a clean breakout of the flag over the next couple days. And the stochastics here really lend proof to that, because we have such a healthy crossover. Momentum is strong to the upside. This is a very great signal. We held the 50-period moving average. We held back above the 20. It's a textbook flag. Apparently the insurance stocks are doing great. This is crop insurance, so this is PRE, and I think we can be all over that early this week. And the second one here, even there's another one, but I have it on the other video. It's just regular Budweiser. Budweiser has been, a good performer. It's an ADR now. It gaps. It doesn't move a lot, but the trend is strong. It does pattern out quite nicely. It's holding that 50-period moving average, kind of nice little flag, and we're just about oversold. So I'd also watch this as a trade above $100. I want to see this get back above 101, and then place that stop down around 99. And I think just like a lot of stocks that get back above that $100 levels, they'll probably start trending above that. It'll be it'll start to develop a nice little trend. We just have to get the right. And this is the pullback. So that's another good setup for this week. But there's so many other ones that are on the HPS watch list. So if you could get to that, great. That's already posted on the site. And the futures again are up tonight, and I'm just hanging out, trying to get this video out to you. I hope it goes through. This is the second time doing it, and I look forward to seeing everyone Monday morning. If you get this Monday morning, well, I'm glad that you're here. All right, I'll talk to you soon.